Hey everyone, welcome back to Corporate Decoder. Today we're diving into a report from MaxCyte's, a company that's probably not on your radar, but stick around, because this report includes stuff about their stock that are crucial to understanding what's going on, so things might get a little shocking. MaxCyte just had their annual stockholder meeting in June. We're going to break down what happened at that meeting, including a vote that dramatically changes the number of shares they can offer. What does this mean for the company's future and your investments if you own the stock? Let's get into it. If you like getting straight answers from these corporate filings, make sure you're subscribed. And hey, we also have a Discord community linked in the description where you can chat with other investors. Join us there. So this document is called a Form 8K. Basically, it is a report companies file with the Securities and Exchange Commission, or SEC, to announce major events. It's like their way of keeping everyone in the loop about big changes that could affect investors, but usually boring. This report is dated June 18, 2025, which is the date MaxCyte held its annual meeting. That's where a lot of these decisions we're discussing today were finalized. One of the key things announced was about their equity incentive plans. Equity incentive plans are ways companies give employees, you guessed it, incentives, usually in form of something like company stock or options to buy stock at a set price. The stockholders approved an update to the MaxCyte Inc. 2022 Equity Incentive Plan, increasing the number of shares they can issue by 2,950,000. This is a big deal. Think of it like printing more money, but instead of cash, it's company stock. More details about this plan were in their proxy statement, which was filled in April. All this is now formalized in what they're calling the Amended and Restated 2022 Plan. Let's talk about those votes. There were actually 5 proposals put to the stockholders, so let's see how the votes went down. First, the election of directors. Maha Massoud got about 69.8 million votes for him, with around 11 million withholding their support. Yasir Al-Wakil had approximately 58.9 million fold votes and nearly 21.7 million withhold votes. Rekha Rajani clocked in with 59.1 million for votes and nearly 21.7 million withhold votes. Rekha Hemrajani clocked in with 59.1 million for votes and nearly 21.7 million withhold votes. That means all 3 got the majority votes and were elected as Class I directors. Now, the big one, the plan amendment. Around 74.1 million votes were in favour, which is a massive win. Only about 6.5 million voted against it, and a tiny fraction, about 200,000, abstained. Adding nearly 3 million new shares means current stockholders' ownership gets diluted. Imagine a pie divided into fewer slices each. That could potentially drive down the stock price. Next, they asked stockholders to approve dropping their listing on the London Stock Exchange's AM market. The vast majority, over 82.8 million, said yes. Only about 4.3 million voted against it, and a small amount abstained. But let's decode this. What does it mean? Art AM is a market for smaller growing companies. Leaving it usually signals a company is looking to consolidate its stock trading, possibly focusing on the Nasdaq where they're already listed. This could increase trading volume on the Nasdaq and maybe attract bigger investors. They also needed to have their choice of auditor, Conresnick LLP, ratified or approved. Over 7 million votes were cast in favour, with a tiny fraction against or abstaining. This is mostly a formality, ensuring the company has a trusted firm auditing their books. Finally, there was a proposal to allow the meeting to be adjourned or postponed if they needed more votes. But since everything passed, this became irrelevant. So what does this all mean from an investing point of view? Are things looking good, bad, or somewhere in between for MaxCyte? First off, I'm not too excited about the increase to the stock plan. This basically lets MaxCyte issue almost 3 million new shares. This makes each share of stock worth a little bit less. On the bright side, the company getting rid of their listing on the London Stock Exchange could attract bigger US investors. In conclusion, the mixed bag of results from MaxCyte's annual meeting makes it somewhat difficult to assess. It is hard to give a rating without seeing how these changes will affect the bottom line or how the extra available shares will affect each share. Alright, that's our breakdown of MaxCyte's latest filing. What's your take on these changes and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.